Let's start with a focus on the Ebola crisis. South Africa has joined several other African countries in issuing an Ebola virus disease travel advisory for its citizens today. When making the announcement at a press briefing, the country's health minister said that a decision had been arrived at cabinet level to restrict South African citizens from travelling to Guinea, Liberia and Sierra Leone. A total travel ban has also been imposed on all non-South African citizens travelling from these three high-risk countries.
I get phone calls from ministers around because ministers in SADC believe if there's going to be any breach in South Africa, then the whole region is affected, because most people who will be visiting from other parts of the world to the countries around SADC, they go through South Africa. So it's also a request from ministers around that please, South Africa, take stringent measures because all of us depend on you because of your facilities. For South Africans who want to travel to those countries, we will discourage them and requested them if they could delay their travel unless they can prove to us that it's absolutely essential that they travel to this area. For instance, it was absolutely essential for the team from NICD to take a mobile laboratory and travel there.
Took their mobile laboratory. It's currently being placed 25 kilometers from Freetown, and it will allow for testing of patients with suspected Ebola to be done very quickly on site, and they will be supporting a treatment centre. And it's likely that they will be commencing testing in the next day or two.
Now, the tourism agencies in South Africa are facing a slowdown in tourism numbers following the outbreak of the Ebola virus in West Africa. The hemorrhagic fever has claimed over 1,300 lives in the region. So far, no cure to the disease has been found. And that in turn, of course, has prompted international and African carriers to cancel flights, leading to a slowdown in tourism activity right across Africa.
Thousands of tourists who had planned trips to Africa this year have put off their plans following the Ebola outbreak in West Africa. While there have not been Ebola cases confirmed anywhere in the world outside Sierra Leone, Liberia, Guinea and Nigeria, tourists are fearing to visit destinations thousands of miles away from affected areas such as Kenya and South Africa. Many tourists are afraid to travel anywhere on the vast continent because of concerns that the disease could spread.
Insofar as this health scare is concerned, the notion is that we are all the same. It is equally a similar sentiment when there has been either an outbreak of violence somewhere in Kenya. If it is a terrorist-related kind of violence, people in Canada will think it's unsafe to fly to Africa, not to Kenya. That's why this notion of people looking at Africa as a country persists.
The bulk of the cancellations are from Asia, which has had its own share of health crises, but visitors from the United States, Brazil and Europe have also scrapped their plans or delayed trips. ERM Tours, which organizes travel to countries in southern Africa, says that a large Brazilian business delegation are one of the groups that cancelled a trip to Namibia in southern Africa this month.
The biggest cancellation we had so far is an incentive group of 1,600 people that was due to arrive in South Africa now on the 9th of September. They've cancelled 2 weeks ago, and since that we've had probably another 10 or 11 bookings that cancelled. So passenger-wise, very difficult to say, but if you take the big group, which was 1,600, I would say you probably sit close to about 2,000 passengers so far.
Around 80% of his Asian customers had cancelled trips coming up in the next 2 to 3 months, including a group booking of 1,500 that is worth $1.12 million. Nearly 10 million visitors came to South Africa in 2013, and tourism accounted for more than 10% of the GDP, according to national statistics. Intense media cover has magnified fears of the disease, and now business travel and investment events have also been affected, threatening the continent's potential as a rising economic star. Mahia Mutua, CCTV.
Let's get a better sense of what the tourism sectors across sub-Saharan Africa are like in the wake, of course, of the Ebola outbreak in West Africa and the subsequent flight cancellations that we have seen by some carriers as well. Tom Putman is Javago's head of marketing. He's with me in studio right now. As I understand it, you've got 8,000 hotels are using your booking platform
that's right.
in Eastern and Western Africa.
Yeah.
Given that reach, what are booking trends like, especially from around March when coverage of the Ebola crisis really picked up?
So around March it was fine. We have, of course, seen a decline in bookings in West Africa. Luckily for us, most of our hotels in West Africa and Nigeria, and that's not been as affected as Sierra Leone, Liberia and Guinea. Obviously in those places things have really, really taken a nosedive. A lot of the travel that we see is within countries and within the region. So we haven't had such an impact from people being afraid to go to Africa. There's this thing of people, seeing Ebola is in Africa. They don't want to go there at all. Particularly in Nigeria, it's a big business zone. A lot of travel for business there, so that's still been going on. In East Africa, we haven't had too much of an impact until now. Of course, the highlight has been on the security situation. Now with Kenya Airways shutting down its flights, of course, regardless of whether people want to travel or not between West Africa and East Africa, it's very difficult. So that's clearly having an impact. But I think that most people who are, there's still travel to Kenya. There haven't been any cases that have put people off yet. But of course it's a huge risk. The moment that we see 1 or 2 cases in Kenya, I think that could change things enormously.
But let's get back to the Kenyan question a little bit in a bit more detail. Before Ebola broke out in West Africa, I mean, this country's tourism sector is already under fire. Insecurity, we've seen at least 100 plus people killed between June and today. Before that, there were travel advisories from the United Kingdom. So the numbers already fairly depressed. But based on what you've seen, especially in the last 3 weeks, given all this hullabaloo about should Kenya Airways cancel or not, have we seen a drop in numbers and bookings coming through?
We haven't seen a huge impact in our numbers, but that is because a lot of our travel is within Kenya. And so we saw the same thing with the insecurity issues. It didn't kill tourism, it just changed where people were going. So rather than going to the north coast, they maybe went to Naivasha. Same thing here. People are in Kenya. If you're already in Kenya, it doesn't really, people aren't scared of traveling. Whether you're in Nairobi or whether you're in Lamu, Diani, Ebola is the same. I'm not in a great position to tell you exactly what's been happening with the figures from the UK, the US, India, for example. I have no doubt that they are taking a bit of a hit because Africa's a huge place. Nigeria, Guinea, Liberia, Sierra Leone are a huge distance from Kenya, and with flights being cut off, they might as well be overseas. But people do see Africa as a scary continent.
Why does that still persist? I mean, it's fairly straightforward. Anyone who's got access to an atlas can see there's a 50 plus different countries. So why is it that Africa is still treated as this, oh, you're just one big fat country, and therefore if something happens in this end, I can't go over there, like what happened in Korean Airlines, for example?
For sure. I don't know. I mean, I guess it happens everywhere, right? So people coming to Africa see that. You see people who go and do Europe. They see Europe as one country. So, part of it is just an ignorance thing. I guess also the way things are marketed. Often, a huge part of Africa's tourism is safaris and wildlife. And actually, whether you're going to go and do that in South Africa or in Kenya, it's marketed in exactly the same way. People see the same product. And they probably feel like they're going to somewhere that's very
more or less
similar.
the same country.
Exactly. I guess that's where it comes from.
Well, we'll have to deal with it. We've got more homework to do on that front. But thank you very much for your time. Tom Putman, Head of Marketing at Jovago. We're still, however, keeping a very close eye with regard to the Ebola outbreak. But right now, let's look at it from an East African perspective. Aviation authorities in the region held an emergency meeting to draw up measures on how to protect the region from any Ebola cases coming in here. Authorities in the region say the deadly disease has already slowed down business activity quite a bit, and tourism has also taken a hit. Michael Beleke has more.
More East African countries are looking at the possibility of cancelling flights to Ebola-affected areas.
There are a number of visitors who have cancelled their trips to our region. A number of our airlines, like Kenya Airways, has already cancelled flights to some destinations in West Africa. And that means it affects business and also the employment situation and our tourism, and it really impacts on our economies.
Aviation authorities from the East African region have come up with several recommendations to address the outbreak of Ebola through international flights. These will include screening of all passengers exiting and coming into the region, especially those from high-risk countries.
We also agreed that we should have harmonized methods of identification of passengers. We also agreed that communication of procedures, both in the air and on the ground, with regard to communicable diseases, and in particular to Ebola in this case, should be enhanced and implemented.
About 10 suspected Ebola cases have been identified in Uganda and Kenya, but medical experts say they were screened and cleared. The Ebola virus has claimed lives of over 1,300 people in the West African countries of Liberia, Guinea, Sierra Leone and Nigeria. Michael Baleke, CCTV, Entebbe.
Quick run through the equity markets here for you. All the markets that we track here today ended the day in the red. And the story, of course, does vary from one market to the next. In Egypt, the simple answer is quite a bit of profit-taking was taking place. However, with respect to the NSE 20 in the Kenyan capital, Nairobi, Kenya Airways is the story of the day. It closed at about 9 shillings and 40 cents a share. And that's, of course, just being hammered and hammered and hammered again, because the airline, of course, is now no longer flying to West Africa. Coming up next, Kenyan banks are outperforming their foreign counterparts at the Nairobi Securities Exchange. What exactly is driving their profitability and what should you be looking out for? All that and more is coming up next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
Zambia is a hidden gem, soon to make its shining debut on the global tourist circuit. It successfully hosted the UN World Tourism General Assembly in 2013 and is expecting the exposure to shoot their previously slow-growing tourist earning numbers far beyond the 2010 mark of $148 million.
Welcome back. Kenya is banning the use of some chemicals on farms as part of efforts to avoid increased sanctions on fresh produce exports to the EU. At the same time, it's stepping up efforts to inspect the produce before it ships out. The European Union set a deadline of the 30th of December this year for Kenya to cut the amount of chemical residue in its flowers and fruits and vegetables, and this is a part of effort to comply with the Union guidelines or risk sanctions on the exports of its cut flowers, fruits and veggies. Now, these sanctions will include close inspection of Kenyan exports by the Union and may ultimately lead to a complete ban. Kenya earned about $944 million from horticulture exports last year. The EU is its main export market. Now then, with the first half results of top-tier banks out, shares in Kenya's local banks are outperforming the foreign counterparts at the Nairobi Securities Exchange by a fairly large margin. But local institutions lead the pack in terms of outright profits, with KCB and the equity pair split from Corp Bank by Standard Chartered. Now, in the year-to-date, however, Equity Bank, KCB and Corp Bank have all outperformed the broader market, rising by well over 20%. Barclays Bank and Standard Chartered, however, are lagging behind. Now, the only outlier among top-tier foreign banks in Kenya is CFC Stanbic. The subsidiary of the South African Standard Bank is up about 39% or so far this year. Let's get some in-depth analysis of what exactly is driving banking shares in the Nairobi Securities Exchange. I'm now joined by Samuel Gishohi. He's the Business Development Director at NIC Securities. Thank you for your time.
You're welcome.
Good to have you here as always. Let's start with a broad picture here. I know you have a hold rating on Barclays and KCB, but you have a buy rating on KCB and Corp Bank. Walk us through the analysis of those respective counters.
Right. Barclays, for one, when you look at Barclays books, their price to book ratio, it's got a very rich rating. Barclays has about a price to book ratio about approximately 3 times.
Yeah.
And that means their capitalization is very good. Their loan book has grown very well, so their volumes to margins are looking pretty good as well, because we did see, in fact, surprisingly, Barclays loan book grew by 20% compared to KCB's, which grew by around 14%.
And usually it's the other way around, because
Usually
Barclays has a fairly conservative lending policy.
True, and that was also a surprise. Now, based on that and looking at the fact that Barclays has been trading in a very thin margin of between 18 and 19 shillings, being seen very defensive, means that we are looking at the possibility of growth going forward, and that's the reason why we think that anyone who's having the stock should hold, and probably we could see that going up. Now, KCB, on the other hand, we have a bank which is really one. Of course, their ratios are looking good. There's a lot of innovation in there, so that's also good, looking good for them. If you look at their non-funded income, double digit. So basically, most of the growth parameters are looking double digit, and that is also good for KCB.
Yeah.
And so again, we had a buy rating for that. We had we had actually put our target at around 61 shillings, and then we have actually upped that to 63 and changed the buy into a hold, because we're looking at the price and seeing it around 57. Then you'd rather be holding it and waiting for it to
for a bit of appreciation to come into play.
Yes.
Let's move on to equity, however. The jump in its shares, because it's up about 40, 47, 48% year to date. And the real jump came through when it announced that it had gotten a mobile virtual network operator license. Now, this is something that deals essentially with mobile money. It's not necessarily an area in which it has core competencies. What are the hurdles in execution you foresee there?
Well, we've already seen the first hurdles. I mean, we've seen the challenge
from
Safaricom saying that there's some security issues regarding the ultra thin
SIM cards,
which is one of the hurdles. The second one, we have seen Safaricom come out and say, okay, well, they're saying we're not worried about the MVNO, but at the same time coming out and saying we've looked at our portfolio and seen that 69% of transactions are 1,500 shillings and below, and therefore, based on that, they've adjusted their pricing down to a level that is competitive. Now, when I look at what Equity is doing, and considering the fact that they have to incur the startup costs, they have to get the buy-in from the investors or the people who they expect to use the system, and now the competitor, Safaricom being seen as the major competitor, has brought the price to a level in which yesterday I was discussing with someone and said looks like a poison pill, saying, look, you have to deal with the costs, we don't have to deal with the costs. They're bringing their platform from Germany to Kenya, which makes it much cheaper for them to run M-Pesa.
So essentially,
their margins
this is a
quite
race
good
to the bottom when it comes to margins and costs.
Yes,
that's the bottom line.
And if that happens, then it will be a hurdle for Equity, whereas for Safaricom, with their prices coming down, with their platform being brought locally and all that, and they've already paid most of the startup costs by now, makes it much easier for them to just sit there and watch the Equity struggle to get the product on board.
Still on Equity, about 2/3 of its loan portfolio is essentially just short-term lending. Given the fact that now we're essentially operating under the Kenya Bank reference rate, doesn't that pose a bit of a threat to their future profitability and earnings?
Well, I'm not particularly worried about that, because my thinking is that if you look at Equity, where they're coming from is They came from a situation where they were lending to what we'd probably call subprime, which is, the lower end of the, the micro and the individual loans, which would have tended to be short-term.
Yeah.
But over time, this is changing because most of the micro borrowers are becoming SME, and that SME space is growing a lot, and in the process, even the term of the loans and the safety, the sort of, because what happens is if you're lending to the micro and the individuals, then there is more risk of default, whereas as you go into the SME, then you have less default risk, and therefore it sort of gives them
and higher margins.
And so it makes them sit better or prettier, because at the end of the day, the micro are ready to borrow at higher rates anyway, because not many people will probably give them these loans.
Yeah.
But as they go into
so essentially the loan book is growing.
It is growing and maturing, and that I think is good for them.
All right. Unfortunately, we'll have to leave it there, but fascinating discussion all the same. Thank you very much for your time.
Thank you for having me.
We've been talking to Samuel Gishoy, who's a Business Development Director at NIC Securities, here with me in studio. Now, quick run through the commodity prices. That arbitrage play that we're seeing between Cote d'Ivoire and Ghana is still very much in force with regard to cocoa prices. They are still hovering around those 3-year highs that we have seen over the last couple of months, really. In trading around here. Oil, of course, still around a 14-month low. Basic gist of it is there's a glut of supply in the markets. Until that changes, these prices really aren't going to move anywhere. When you come back, we'll introduce you to a female Zimbabwean entrepreneur. She's turning the tables in a security industry dominated by men. Fairly interesting story, this. Stick around. Let's talk about security. Once upon a time, it was the preserve of men in Zimbabwe. Today, though, that's a very different story, thanks to one Divine Ntuklula. She's one of Zimbabwe's most successful female entrepreneurs, and she has been flying the nation's flag. She's been named African Woman Entrepreneur of the Year, most influential woman in Africa, and has even made it to the Forbes list of African women. On Grassroots tonight, Farai Makutuya caught up with her to find out what's driving her success.
This one is what Zimbabwe took.
The accolades have been free-flowing, but this wasn't always the case. Divine Ntuklula started her journey to the top from very humble beginnings.
Securico was founded on my kitchen table in 1999. 4 employees.
Fast forward 15 years. It's now a 4,000-strong workforce, and Securico is the top security company on the market. Without prior experience and venturing into a male-dominated industry, Ntuklula had the odds stacked against her. She tells me some of the harsh realities she dealt with in the early days.
Some people would be very blunt and tell you, sorry, I don't deal with no entities like yourself.
Undeterred, she kept at it and became a trendsetter. Securico was the first security company to get ISO certification. It has made security a dignified profession.
Everyone is now ensuring that they are at their best in terms of tracing their operatives, in terms of how they train their people, in terms of how they treat even their workers, because it is the way we treat our employees here. We treat them with so much respect, with so much dignity. And this is what then the industry was lacking.
They don't call them guards here. They refer to them as security operatives. Those are some of the little things that have made a difference and boosted morale to an all-time high. A parade like this with women in it was a rarity a few years back. A woman commanding that parade was unheard of. But today, 25% of Securico staff are women.
About it.
It's part of the revolution Ntuklula has achieved.
we changed the face of the security industry in terms of women. We target mainly widows and single mothers who invariably did not have an opportunity to get a better livelihood, to educate their children.
Securico has gone a step further to protect female guards from abuse at the hands of their male counterparts.
And some of them were dismissed. We want to send a message.
Namo is one of Ndukula's proteges, one she takes pride in having developed from a guard when she joined the company 12 years ago to managing one of the operation's most important functions. This is what Ndukula says is her greatest achievement: challenging, empowering, and inspiring women to achieve more. And even with all the personal and corporate awards, she still wants more. 15 years is quite a milestone. Where to from here for this company?
Well, for us, it's really about regional expansion. That's what we are looking at. We're wanting to go into the region. Zambia is a good proposition for us. We've been looking at that market, and we are certainly hoping that we are going into the market shortly. And in time, maybe in the next 5 years, we should be also operating in 2-3 other regional markets.
Judging by her track record, few would bet against her. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Right then, as far as currencies are concerned, let's move through those fairly quickly. The Kenyan shilling, of course, still displaying some of the weakness that we've seen in the last couple of trading sessions. 88.30 against the American dollar. One of the closing figures today, the Egyptian pound relatively stable, 7.15. However, tangentially related to the Kenyan shilling, the Kenyan government has cut its overdraft to the central bank to a one-year low of about 13 billion shillings. To be entirely honest with you, I can't remember the last time they haven't run an overdraft for this short a period of time. Now, just before we go, here's what's coming up on Global Business tomorrow. Kenya's Communication Authority, it's expected to rule on whether Equity Bank can employ its thin SIM cards on existing SIM cards of mobile telephony companies for its mobile banking platform. We spoke about that a little earlier here with Mr. Gijohi. Details of the ruling and its impact on the growing mobile money sector will be coming your way right here on Global Business. That's it for this edition of the program today. However, send your feedback to Global Business Africa at cctv.com or check us out on Facebook and on Twitter. The news continues over there 24/7. We'll see you over there. Thank you for watching. I'm Ramanyar.